Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives, an amazing team of analysts with the intention of helping dairy and livestock producers manage the risk. I'm your host, Jim Matthews, reporting from the Chicago office on our monthly WASDE report day. To review that report and the impacts on the grain and feed markets, I am joined by Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed, resident WASDE expert from way down in Atlanta, Illinois, Verl, no doubt Prather. Team, how are we today?
Pretty good today, Jim. A little surprised by the numbers we saw today, but doing all right.
No doubt we're doing good here, Jim.
No doubt, buddy. All right, well, Jake, we're going to get to your surprises here. We've got a lot to run through today. So, Paige, if you would kindly timestamp the broadcast, it is Thursday afternoon. We decided to push the recording back a little bit to let that WASDE report come out and let the markets digest over the course of a couple hours here. So, let's dive into that report. It was released at 11 a.m. this morning. Markets quickly rallied across the board in Chicago. Verl, would you mind giving us some of your key takeaways on today's monthly WASDE report?
Yeah. Thanks for having me again, Jim. So I think today's report was kind of a perfect reminder of why it's important to be cautious when it feels like all the market participants are piled onto one side of the boat. Since the beginning of the year, really, the market has held quite a bearish sentiment regarding corn and soybeans. And for corn, demand obviously held a lot of the concern, right? And especially as far as exports. The USDA did, in fact, reduce export expectations. They cut corn exports by 150 million bushels, and soybeans got cut by 55 million bushels. So both pretty decently sized numbers, and both numbers that the market was looking for and preparing for over the last couple of weeks. However, the surprise to many came when the USDA lowered corn production by 200 million bushels and soybean production by 69 million bushels. For corn specifically, the biggest cut in production came from a 1.6 million drop in harvested acres. Nonetheless, moving south, we have Argentinian and Brazilian corn production lowered by a combined 4 million metric tons, albeit still at very good production levels compared to previous years. And drought conditions continue to leave question marks surrounding Argentinian production concerning soybeans. And the USDA responded by cutting production by 4 million metric tons there. Also, WASDE kind of stole the show today, but the USDA did release their quarterly stocks report at 11 a.m. as well. And the December 1st corn in stock domestically was the lowest print since December of 2013. So you can kind of do with that as you please. Going forward, I'm really looking for corn to test this 675 level. We've got a kind of a wedge formation that seems to be kind of the top end of the current trend.
Good deal, Verl. Thank you for that. And a couple of those keynotes there, you brought up that sneaky little stocks report that comes out, and I say sneaky because it's the middle of January. That stocks report is usually released at the end of the month, but because of the New Year's and market holidays, they push it out to the mid-January WASDE report day. So there's a lot to walk through there. We had a couple of these points noted on the previous episode here with Jake when we talked about how the pace of exports is going to impact this report. And Verl, you noted that heading into the report, those bearish sentiments of the market anticipating we're going to cut exports, most likely loosen the balance sheet here in the U.S., especially on the corn side. I think that's what everybody was feeling going in. So as you said, everybody ran to the other side of the boat once those numbers came out and showed that we'd actually tightened the U.S. balance sheet. Verl, do you think we still have room to go on reducing U.S. corn exports?
I would not be surprised, but the reality is, coming from a place where Some traders might have been thinking we needed to reduce by 200 to even 300 million bushels, right? We've already seen 150 of it drop. So how much more room is there to continue dropping? I don't think it would be all that surprising to see an additional 50 to 100 million bushels. But in the end, even with that, everything else staying the same, we're still sub 1.5 billion ending stocks.
True. And I think that's a fair point in that we've got room to go, but that, as you said, today was kind of a big chunk to cut off of there. And the accounting mechanisms of the USDA, perhaps they could take some allowance in that larger cut based on the surprise changes in production that we were not anticipating, at least on the acreage front. You may recall Jake's bold prediction last week on corn yields being raised. So we'll turn to you, Jake. Jake, do you want to take a quick moment to brag about that bold prediction?
Yeah, I mean, pretty happy to see that number pop up there a little bit. Definitely was not expecting the cut to acres that we saw there. I think that can probably be allocated, like we've talked a little bit today, to some of the western fringe of the Corn Belt there, maybe some abandoned acres in Kansas and Nebraska and the Dakotas where they were really dry. And they said, you know what, we're not going to be able to chop it. It's not going to yield what we need. And they just left it out. We'll have to dig into that a little more, but I would bet you that's where some of that comes from. And I would probably guess that comes in and starts to underpin basis again. We thought, maybe there could be a little bit of softness if ethanol continues to cool off and exports have been as slow as they've been. We did see some softness to the west, but I bet this report comes in and starts to hem that up a little bit to take some of that bearish sentiment out of basis, and we'll probably be stuck with these numbers or firmer through the rest of this feed year until we've got a crop coming off in the U.S. Because as you had alluded to there, we could trim exports quite a bit and we still won't get back to a 1.5 billion bushel balance sheet on corn. We won't even get close to it. And again, a lot of the Western feed market draws from the western edge where potentially we lost these acres and had some of our worst yields. So a little bit of support there for the basis market on that. But at the end of the day, we're still looking at a really healthy crop coming out of South America potentially here, especially Brazil. And if they do well on this first round and then are able to put together something of a decent safrinha crop or their second corn crop after they get beans out, we'll be probably about that time ready to go into planting here in the U.S. And that could play favor to the futures market, if nothing else for us. So we could still see some beneficial movement in cash price as far as futures helping us out there for our rest of our feed year on the corn side. Maybe that plays a little bit into some of these other cash commodities. We're seeing crude oil values start to creep back a little bit higher. Maybe some of these logistical issues that had hampered the ethanol plants get worked out, and we start to see some of those folks get running a little smoother again, and maybe see some breaks in DDG values and in turn gluten values and some of those other protein alternatives. Seems like soybean meal is starting to find a little bit of resistance up here after this pretty dramatic run over the last 60 days. And again, South America's got a really nice crop, particularly in Brazil, raising production there on today's report. So our balance sheet was trimmed up a little bit there, but the global soybean balance sheet grew. So again, could be in the mix to get into February, start to harvest down there, maybe revisit that renewable fuel draft letter that had come out that we've been talking about and see if maybe we start to see a little bit better inclusion of soybean oil in that blend there. And maybe that helps to reverse some of this trend we've seen in soybean meal futures. So I think there's still some opportunity on the table. The cash side of it, again, we shrank the U.S. balance sheet on beans. So I think that will again come in and underpin some of this soybean meal basis, but maybe we'll have some opportunity on the future side there too.
Good deal. Yeah. And the focus on, we've brought up South America a handful of times. And again, on the previous episode, when we talked about, big things to look for ahead, Jake, a lot of focus on South America, of course. So it is that time of year. They took a nice cut out of both Argentine corn and beans, I think more than we anticipated and the markets. But that's a interesting note on the global balance sheet, ultimately actually loosened a bit on the bean front. And they did raise the Brazilian production slightly, as we touched on earlier. So South America is going to continue to remain very interesting. How bad is Argentina really going to be? And how ideal will the Brazilian production numbers remain? Verl, do you think the Argentine corn number still has a ways to go in terms of cuts? I asked you about that on U.S. exports, but do you feel the same on Argentine corn?
Yeah, it'll be interesting to see. I think the market, like you kind of mentioned, Jim, we've got to figure out if rains in the next handful of days, call it 5 to 7 days, are going to make any difference whatsoever.
Yeah.
Right. And so the forecast is looking a bit friendlier, but basically, is the damage already done? I think that obviously missing these rains the next week or so could lead to some lower numbers in Argentina. But as you mentioned, look at the combination of production between Brazil and Argentina, and you don't have to worry quite as much.
Yeah, exactly right. You put those two countries together, and especially year on year, the giant leap out of the Brazilian numbers versus a year ago this time. And your notes on we know the soil moisture deficits in those key areas of Argentina. So now, as you said, Verl, it's a matter of, can we at least stabilize or perhaps limit the decline in conditions there, versus most likely not able to improve much, but that could determine how we trade this thing over the next month or so. Definitely a strong day in Chicago today, futures-wise. So very interesting. Gents, excellent work today. Thank you both for your insights. A big thanks to Verl for returning to the show. Great to have our in-house WASD expert from Atlanta. We would also like to thank the EverAg Insights crew for their support. Thank you to Paige for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.